the next bull run comes when we start getting actual allocations of investment into Bitcoin. The only steady stream of buyers for Bitcoin is really strategy. Imagine all of a sudden you had pension funds, hedge funds, allocators that have a steady stream of buying through a mandate of sticky deposits of Bitcoin every month.
This is Seamus Rocca, CEO of XAPO, one of the world's oldest Bitcoin companies and a true pioneer of Bitcoin custody. In this interview, he explains why the biggest wave of institutional capital is still yet to enter Bitcoin and why it could be the catalyst of the next major bull run. However, he also shares why he believes Strategy and Coinbase could pose the biggest risks to Bitcoin. This is an interview you don't want to miss. Last time you were on the show, you said something which I have referenced for over a year now.
All right.
And it's something that I think about a lot. You said, when your Bitcoin stack gets valuable enough and you're self-custodying, it gives you the cold sweats. So you guys solved that problem, right? Bunkers in mountains.
Yeah.
It's very impressive stuff. Is it enough now to just custody? You're building things on top of it. Does Bitcoin now have to be a productive asset?
That's a good question. And I think that it's a challenge that I have all the time because the bunker and custody is what we're best known for.
Yeah.
And for years, it was a bit like, look, that is a problem that does need solving. And we solved that problem a long time ago. And maybe when Bitcoin was at $2,000 a Bitcoin, people didn't feel that it needed solving. At $125,000 at an all-time high, I didn't have to fight as hard to convince people.
Sure.
Right? Because if you had 1,000 Bitcoin at 125,000 Bitcoin, all of a sudden you're starting to get the cold sweats. XAPO makes sense. But, you know, Wences and I had both worked in traditional finance for a long time. And you look at traditional finance, custody is a race to the bottom of price, right? So custody alone is never enough. So the honest answer is when we built XAPO, custody was became a bit of an accident. So Wences had done such a good job of convincing people about XAPO and Bitcoin in Silicon Valley. You know, people invested in XAPO and then they also bought Bitcoin and turned around and said to Wences, what do we do with the private keys?
Yeah.
So Wences felt this need to create a product to service that need, which is just essentially keeping the private keys safe. So that's how we were born as a custodian. But then as we evolved and we got licenses, for us, you know, there is no such thing as a deposit-taking license for Bitcoin. There was all this debate about whether it's a security or not in the US for a very long time. But everything that we do on the Bitcoin side is just trying to mimic what a customer would expect to be able to do with fiat with financial engineering of what's possible today on the Bitcoin side. So if you think about it, custody is another word for a deposit. It's just that I'm not allowed to call it a deposit for regulatory reasons. But what do you do with your money in a bank, right? So you keep it safe in your bank in deposit. This is with fiat. You get an IBAN so you can send and receive money. You get a card so you can spend it. You get to invest it for yield in a savings product and earn interest, or you borrow. Those are kind of the 5 basic things you do with a bank. There are more sophisticated versions of all those products, but they basically fall into one of those categories. So if you think about it, that's what we've done on the Bitcoin side of XAPO. Custody is the equivalent of deposit taking. Lightning and stable coins in and out is the equivalent of an IBAN. Debit card issued by Visa or MasterCard, but really what it does is allow you to spend Bitcoin by doing some financial engineering in the background. Savings product, we've got the fund that pays you 3% if you invest in the fund. So even though we've created a fund to be able to allow customers to earn yield, it's because there is no mechanism to have a savings product for Bitcoin out of a banking license. So again, financial engineering. And same with lending, right? We're obviously going to use Bitcoin as collateral because it's the best collateral you can have because you can sell it on the spot. So we leverage the fact that we've got people's Bitcoin to be able to lend against that. So the short answer to your question is absolutely you need to do more than just custody. And what we try to do is, if you think about the early days of crypto, people associated Bitcoin and crypto with exchanges, assuming you trade, right? Because of Wences' background history, being Argentinian, he always viewed Bitcoin as digital money. You know, it's a store of value and it's the money of the internet. So you don't have to worry about, you know, governments confiscating deposits or hyperinflation. It solves that problem. So therefore, we always thought about XAPO as how can XAPO facilitate Bitcoin becoming the new reserve digital currency of the world and bridging that to dollars, which is the existing so reserve currency of the world.
Where do you fall on this conversation about Bitcoin as money versus sort of a savings tool? To me, it seemed a straightforward question. I guess I leaned sympathetically toward Bitcoin maxi. Bitcoin is money. I find myself more compelled to see it as a savings tool. I don't use it. I openly say I don't really use it as money. I do in some instances, but even then it's forced. Like I'm using it because it's the right thing to do in that circumstance, not because it would be what I reach for. I'd rather offload fear given the inflation of it. Where do you land on this? Is it a bit of both, or is it, as we're starting to see, the baseline for digital money?
Yeah, great question. And I think what you're describing is that sort of pain point that all Bitcoiners feel, myself included, which is, here is an asset that you're holding and you were smart enough to be an early adopter. Okay? In relative terms, we're still early. Right?
Yeah.
So you're an early adopter, you got this asset that you know is potentially going to be anywhere from $500,000 to $1 million in the next 10 years. Life gets in the way. We both have a love of watches. You want to buy a nice watch and you go, it's going to cost me X. Do I really want to sell my Bitcoin to buy that? So now you're looking for solutions. Part of the store of value, part of the journey, we're living right through it. And there's a lot of products that are being built around it. So one is, how do I create liquidity without selling Bitcoin, borrow against your Bitcoin? The other one is, how can I live off my Bitcoin without having to sell them, generate yield? So how do we create financial engineering where without me selling my Bitcoin, I'm willing, if I had the risk appetite to invest in Bitcoin, I probably have the risk appetite to put some of them at risk in the interest of yield, because it might mean that I can live off that yield and I don't have to work and I don't have to sell my Bitcoin. That's a great product. I don't think that means that the sort of Bitcoin as money payment mechanism argument is dead. It just means that there's something that's competing against that right now that has more value.
The whole lending side of crypto is difficult. It had a very rough start to life. People are very skeptical of it. With you now, you've been offering it for a while now, borrowing against your Bitcoin. Is there any conversations around that are difficult? Do you still suffer from the reputational damage of early life lending in this space?
Yeah, for sure. And I think what we try and sort of appease people with is being open and transparent about how we do it. There are a lot of people out there, for example, in the crypto community that are sitting a lot of the cash, right? So without mentioning any of the names, but any of the stablecoin issuers, for example, they're long cash. I am a custodian. I've got a lot of Bitcoin from my customers. So if I said to you, well, look, your Bitcoin is never going to leave XAPO. I'm not rehypothecating your Bitcoin at all.
Yeah.
But all I'm going to do is I need to take it as collateral. So the Bitcoin crashes 60% or hits certain trigger points, I'm going to liquidate the Bitcoin, or you could give me more Bitcoin and you sort of do a margin call, you top it up. You go, well, you're not lending my Bitcoin, it's not lending XAPO. I trust XAPO already with custody. Happy days.
Yeah.
But then your question is, well, how are you generating the cash? Well, I borrow the cash at 6% and I lend it to you at 7%. Who do I borrow it from? People who are long cash.
Yeah.
See what I mean? So I don't need to rehypothecate your coins to generate liquidity.
You look at the lending and the yield products. Is that something you're going to continue to do to make sure you're evolving alongside Bitcoin?
Just look at what people have always wanted in TradFi. It's the same. Custody is a race to the bottom of price. People want to invest capital. They want yield and they want a return. They want to be able to diversify some of that risk. They want to trust the platform to be able to do it with. Within that bounded context, it's really not that difficult to understand what it is that XAPO is trying to do and where we're trying to innovate.
It's funny, you've echoed something I said a few weeks ago. I was in New York doing some interviews. And sometimes I have to take a step back and look at the situation, because in 2018, I was meeting with companies. Some of them were big companies, and they were already looking at Bitcoin. They were already looking at blockchain, but they didn't want anyone to know that they were doing it.
Yes.
And it was a clear stipulation. Even if we meet, it's off the record. And then 2 weeks ago, I'm sitting with the chief counsel of the SEC, of the Crypto Task Force. And sometimes I think it's crazy how far we've traveled in such a short period of time. And we often say, we've said it in this conversation, we're still early to Bitcoin.
Yeah.
What do you think right now is just starting to move into the we're ready phase for Bitcoin? Is it presumably it's things like yield and lend?
I think that's a big part of it. In the last bull run, there was a lot of comments around institutions are coming, right?
Yeah.
And I would tell anybody who listened that just looking at the ETF growth as a proxy for institutional investment was ill-advised, because we know that TradFi loves to do trading and arbitrage and leverage, and you need the underlying or collateral to be able to do that. So what people were saying as a benchmark or a proxy for institutional investment was actually a proxy for leverage in the system. I think for me, the next bull run comes when we start getting actual allocations of investment into Bitcoin. So think about pension funds, think about hedge funds, think about treasuries. People say, hey, you know what? At 60,000, 2% allocation to Bitcoin, the downside risk is relatively small. The upside risk is huge. If you think about gold, even though monetary system got decoupled from gold in the 70s, there are still central banks that regularly buy gold. That keeps the price where it is today, because you've got a steady stream of buyers. The only steady stream of buyers for Bitcoin is really strategy. But imagine all of a sudden you had pension funds, hedge funds, allocators that have a steady stream of buying through a mandate of sticky deposits of Bitcoin every month. Before you know it, 2 years from now, we're into the next halving. Right? And you go from, I think it's from 3 Bitcoin per block to a Bitcoin and a half. Yep. So you're going to have a squeeze in supply and incremental steady demand. That's Bitcoin and 500,000 right there. So I think that it's those mandates that are the key. But what we do know is that people in traditional space have to go through committees, they've got to go through executive boards, they've got to go through NIDs, they've got to go through CEOs, people who know better, right? So there's going to be a lot of resistance. But I think there's still a lot of it happening, a lot of family offices, a lot of people who are on the sidelines waiting to part their money. And I think that's what drives the next bull run. We're not going to see it in the next few months, but we'll probably see the beginning of it early next year.
It's funny so I always talked about the spot Bitcoin ETFs launching in the US. That was January 2024. And I remember it feeling like the moment institutions it was like almost a legitimizing of Bitcoin, and the institutions were now here, and that was it. And I remember having someone on the show who said that we ought to taper our expectations.
Yeah.
Not because lots of money isn't going to flood in. It did, and it broke records. Yeah. But because things like pensions, their due diligence process is literal years.
Yes.
And this is a slow burn. And it's interesting to hear you echo that, and that we're still not really seeing them at the table.
Not yet. I think what we saw was a lot of pent-up demand that rushed very quickly, because there were a lot of people that wanted to buy, but for whatever reason, it had to be a listed security or whatever it might be. So the ETF was a game changer. Let's not kill ourselves that that's not true. Of course it is. But it's not necessarily a proxy for, the institutions are here. No. It was a beginning for the conversation, and it was a catalyst for a lot of pent-up demand. I think we just needed another cycle before the actual institutional money has gone through its due diligence and it starts to invest. And because we're at the bottom of the cycle, the price is attractive.
Okay, last question for you. Do you have anything that gnaws at your belief in Bitcoin at all? Is there anything that worries you, anything that could derail the train?
The only one thing that I do worry about is I don't think that this crypto winter is that bad compared to others that we've had, which is exactly your point. Think about when FTX crashed. That kind of felt like the end of the world. Think about the sort of crash before that one. We'd gone up to 20,000 and crashed back down to 3. End of crypto. We've heard that many times. So I don't think this crypto winter is that bad because nobody's blown up or at least nobody meaningful has blown up. So it's very much, we're in the cycle, right? And I think that, like I was saying before, we need more strategies. We need more steady buyers of Bitcoin if we want Bitcoin to get to the next bull run. The other side of the coin to that is I think there is a lot of concentration risk with Coinbase and with MicroStrategy. Coinbase on the custody side, and Strategy in terms of being that steady buyer and doing the sort of yield enhancement products.
Yeah.
And when you have that degree of concentration on one or two companies, any wobble in one of those two companies puts literally the whole industry at risk. It would be hard to recover from that. Before I joined crypto, I used to work in liquidity and treasury in a major bank. And one thing that you do learn is that when there's a run on a bank, it doesn't really matter whether there's actually anything wrong with the bank. All you need is the perception that there's something wrong with the bank for there to be a run on the bank. If that makes sense. It's a self-fulfilling prophecy. So even if the industry got wind that there's something wrong with Coinbase or Strategy, that might be enough to create a huge shock in the system.
What would it really take to shake the foundations of Strategy, do you think? Is it just price drawdown, or is it something
Well, that's
bigger?
what I mean. It doesn't even have to be real. It can just be perception. I mean, recently they sold 32 Bitcoin for liquidity, and they'd been signaling for a month that they were going to do it. Yeah. It was a deliberate strategy in terms of being able to prove to the people that were going to do credit ratings or whatever that they could have liquidity. So they signaled that we're going to sell it, sold it. Now, maybe it was just coincident that the market moved that day after the announcement, but it did, and quite a lot.
Yeah.
So even something as basic as something that was announced, premeditated and planned, that had been communicated to the world, 32 Bitcoin, which is a rounding error for Strategy, moved the market.
Yeah.
Imagine if it was negative news out there that, maybe there's something wrong with Stretch. So it doesn't need to be real for it to be catastrophic. And I think that's a problem. Now, the answer isn't we don't need Strategy and don't do it. The answer is, think about traditional banking, right? That's always the benchmark, because if Bitcoin is the future of money, we don't need to reinvent the wheel. We're just trying to do it with more innovation and more digitization. So what do banks do? You diversify. Yeah. We need more strategies. We need more options. Regulated with clear disclosures so you can make an assessment of the risk. We need more of that. That's what good looks like, not, let's not do it at all. So don't get me wrong, I'm a big fan of Michael Saylor and Strategy. I think they do an incredible job. But you asked me the question because it's only them. Anything negative on them could be a huge negative on the industry and the market.
Seamus, that was a pleasure.
Absolutely.
Thank you very much.